The federal government Tuesday began pumping billions of dollars into U.S. banks. Treasury Department Undersecretary Tony Ryan says this comes after a weekend of deal-making.
We've signed final agreements with the initial 9 major financial institutions that hold 50% of all U.S. deposits. And over this past weekend, we directed our custodian to deliver the capital to these institutions, and that process is starting today.
The government will purchase $125 billion in U.S. bank stocks over the coming days.
It's an investment, not an expenditure.
Institutions such as Citigroup and Wells Fargo are each getting $25 billion. Other firms like Goldman Sachs and Merrill Lynch will each get $10 billion. The idea is to get credit flowing again, with hopes of stabilizing the economy and fighting off a protracted recession. This money comes from the $700 billion economic bailout package, passed by Congress and signed by President Bush earlier this month.
This program is aimed at healthy banks and provides attractive terms to encourage lending.
According to the Treasury, another injection of capital to a second round of banks is also in the works. More than $35 billion will be divided up among regional banks like PNC, Capital One, and Northern Trust. As the country's biggest banks become partially nationalized, the government is hoping they will have no hesitation in lending that money back into the economy, an essential step for the plan to work. Standard & Poor's analyst Sam Stovall says it's not a sure thing.
I don't really think there's any way that you can really guarantee that these banks will be lending this money. Certainly they are going to use the money to shore up their own balance sheets, and some of the money will be used for lending. This, so according to the CEOs of many of the banks that were recently interviewed in the financial media, but obviously the government itself will be keeping tabs on the money that is lent to these banks.
Over the next several weeks, the Treasury is expected to use billions more of the bailout money to start buying up bad subprime mortgage loans from banks in a bid to usher the return of a stable economy. Ted Shaffrey, The Associated Press, New York.